Welcome, everybody. And tonight, she and I gonna go over one project with you, and also talk about the new development, new investment concept called IOS. IOS stands for Industrial Outdoor Storage. You might have heard about this project, GT48. GT stands for Georgetown 48 acres. We also have a Bachelor 47 acres. Some of you also are investors. So we're gonna start this now. And today's meeting is uh, recorded. So for the people who couldn't join tonight, and we will send the recording. So, and this is for educational purpose only. And tonight we actually limited only to our investor. We actually only invest to a subset of investor. So it's very selective here. Investment always have a risk, and we welcome you ask questions. And but before you share the information to anyone outside of this group, get our permissions. I think everybody here should know me. Our own investors. So yeah, Lynn, living in Austin for 30 years. I started my career in the Fortune 500 company as a software development, program management. I started the Real International back in 2014, 10 years now. Over the 10 years fund journey, started investment, land development, different asset class. So tonight we're really excited to talk about the very new concept and hopefully enjoy it. Tonight we happy to have Chi join us.
Absolutely. Thank you, Lynn, and thanks to everyone for joining. So I'm the Chief Investment Officer of Real International, bring about 20 years of experience to the table, mostly institutional background, about $3 billion in transaction experience across office, retail, multifamily, and student housing, and some other minor groups. Really enjoy the space, and this is where it is.
Thank you, Chi.
So
Today, yeah, go ahead.
I was going to introduce. So today, obviously, Lynn will start first part of the presentation to lay out the agenda. So today we'll be talking about a few core things. First of all, what is IOS, right? What is industrial outdoor storage or outside storage? Second is what are the fundamentals driving the interest in IOS today in the space? Third is what are the supply and demand trends generally nationally and as well as in Austin that are making this an attractive opportunity? And then we'll move into GT48, which is the actual play on the table that we have right now.
It is so new. I actually have someone came into my office today. Well, from software development point of view, I thought you were talking about operating system. Today, as Chi and I are gonna go through the presentation, when you have a question, feel free to use the chat box and type in your questions. We will leave time for FAQ. So it's not an operating system. It's industrial outdoor storage. Typically, this is really the commercial property, one of the asset class for a company to store equipment, supplies, or anything they need to use for businesses as a lay down yard. Okay. Also, you can tell from this picture here. Typically, okay, the characteristic of the IOS are typically have 2 to 10 acre in size. 2.5 acres, very common. So we'll have a very, what you call the low floor area ratio, we call FAR. Typically, it's less than 20%. The building actually is not the main thing on this property. Typically, it's only 10,000 square foot. Has a small office, a bathroom, and not really used for heavy office or manufacturing. And because the equipment will cost millions and millions of dollars, we'll have a security fence around it. So the picture shows everything here. Okay. Here, you see all the logos, right? Very familiar with the FedEx. You see a company uses our really cross industry, construction, logistic, trucking, and freight and the fleet, right? So cross all over the places here. When you drive 35, you will see United Rental all across it everywhere. So that's you'll be surprised how many of those companies actually active looking space in our region right now. Anything? Oh, also the tenant also pay triple net. Okay, so the leases are structured at the triple net. So they typically lease the building. They, of course, they measure by any leases, right? So how many dollar per foot. But because it also rent the whole space with the laydown yard, that's why the rental rate, base rate is a lot higher than the typical industrial space.
Great. Thanks, Lynn. Yeah, and so looking at sort of the global macro picture of this, right? Why is iOS sort of in the news? Why is it booming? There as the cities and states grow, particularly Texas and Florida and the Sun Belt states, over the long run, over the next 10, 20 years, it's really driving the need for these outdoor storage, these 2.5 acre, lots, even larger, to supply the demand or to store the equipment and things needed by these cities as they grow. And they need to be particularly closely located to the centers that have the demand. So we're seeing right now, just if you look at the markets, you're seeing JLL, you're seeing JP Morgan, you're seeing Blackstone. There's a large iOS owner operator called Zenith that just put out 700 million. These folks are rapidly aggregating this disaggregated industry in order to more efficiently serve the growth in these markets. So we're starting to see all these one-off sites start to come together and coalesce right into these portfolios that serve pockets, like North Austin, South Austin, or Central Austin, or even just the Sun Belt states on these larger portfolios. So we're seeing this trend very clearly now in the news.
Yeah. Remind me of a BTR, right? So BTR, when we first started, I think my first BTR project was 2015. Mostly single family rental are run by mom and pops. So institutions start getting into the space, you see the words BTR, build to rent, all that all over the place. But now if you search, you see those iOS. I used to be mom and pop, just own the spaces every city, every single corner. Now you actually see the big name here, Blackstone, actually actively acquired asset in that space. I was, Chia mentioned to you, have a call with one of the broker. He used to work for CBRE. Now he's thinking going to different brokerage firm. When I say, "Hey, I have a site to call," I always put my name on there. So people are actually really excited with those type of
Yeah.
opportunities.
Next to data centers, I hear iOS a lot, right?
Exactly.
Boom in that
So
demand, right?
yeah, so it's as a hot at the data center, just like a few years ago, BTR is really a buzzword. Now you mentioned iOS, and we actually got people promote iOS concept to us. We're like, whoa, we start seeing more, right? We were kind of surprised because really not many player in this Austin market.
Absolutely. So from a fundamental standpoint, right, what is driving all of this? We'll get into a few slides just so you can understand what is driving iOS interest from institutional investors. Really, it's a small market size today. 200 billion is not that large, and the sales volume isn't substantial. But what they're doing is they're aggregating these portfolios. Why? If you look at these two charts in the bottom, I think it really helps. On the left-hand side, basically these bars are showing 1 year, 3 year, 5 year, 10 year, and 20 year projected growth. You'll see they're basically 4% and above. Over the next 3 to 5 years, we're really looking at 10%, 8 to 10% growth, which is very, very strong. And obviously, we don't believe that that's going to continue forever. But at least in the short term, there's so much pent up demand that we see, a very large increase in rents on the horizon, in addition to the strong rents already achieved today. The second thing is on the right hand side of the chart. There's a couple blue dots, but there's a small orange dot right there at the bottom. Basically, what this is saying is that this is the vacancy rate across the industrial spectrum, looking from iOS on the left all the way to different asset types actually. iOS, industrial, and then you've got retail, multifamily retail, self-storage, and finally the highest vacancy is office. Now,
Yeah.
iOS is one of the tightest markets, in some places sitting as low as 2% at a market level. For us, I believe in our market, it's about 3 to 4% at this point. So this is where the demand really comes from. There's so much pressure on rents. Vacancy is so tight that we see a very bright future, at least over the next 5 to 10 years for iOS.
Yeah. Do you remember the time when we call Will Hall came to our office, right? We were like, hey, Will, come on. You are the iOS expert. He's a broker dedicated to that. What did he say? He said, you build it, they will come or some
You
sort of
build
thing.
it. There is he has a waiting list
Yeah,
effectively, right, of
exactly.
iOS need users all across the country, wherever they're looking to move into, whoever's looking to move within Austin, relocate within Austin, or to move into Austin. There is this growing list of people that need this space.
Right.
It's very
Mhm.
hard to find it.
Yeah. After that meeting, we really like, huh? Seriously, every time he's just non-stopping emphasizing that. Yeah.
Yeah. So that's the core, right? That's the supply and demand. And then there's additional factors that we can, just dive into, like the demographics are really favorable, right? With e-commerce and really just this move to last mile. It's really favorable for this sector. It consumes a lot of the industrial space, leaving very little for iOS, interestingly enough. But iOS also is a last mile business. It's your local HVAC, supplier who needs to put down their equipment. It's your local pipe layer that needs to lay pipe in an outdoor yard. It's your local, United Rentals or Rent Equip that has to have their equipment within just a few miles of the use base. So this is where sort of that last mile component makes this very valuable when it's located close to the user base. The next one is like, actually, that's what I just spoke to. The first and last mile distribution of goods is the trend. And there is a very diverse base here. It spans every major industry that needs to produce something. So you can have all of the major trades that are used in building construction or road construction or any kind of construction whatsoever, or any home use, residential use, or even there's pest control companies and all sorts of other
Yeah.
folks that operate at a large enough scale that could use this.
Yeah.
So it's a very diverse base of need, which makes it pretty recession resistant, in our opinion.
Yeah. And we actually, when you say last mile, when you say what's the last mile, give me an idea. So we count the rooftops. All right. We call rooftop. How many homes around it? If you're surrounded by the neighborhood homes, think about the plumber and like AC company, supplies, and it could be parking school buses. You could think about anything, right? So yeah. So
But
why
what it comes down,
is what's iOS so hard to find? What's the dynamic here? I mean, I try to explain dynamic. I'm really happy when our back office, our marketing team put this together. I really like this is a really good summary.
yeah. So then they say basically, okay, well, the first question an investor would ask is, okay, there's a lot of demand, we see it, but isn't there a lot of land in Texas or in these Sun Belt states? Well, what's really interesting is iOS sites are actually really, really hard to find because a lot of zoning doesn't actually is not conducive to it, or is much more. It's harder to find these plots of land that have the right zoning, permitting, and the actual ability to deliver this. There's resistance, there's NIMBYism. There are a lot of factors that contribute to making it much more difficult to find an iOS type site than you would normally expect. So, the right acreage access, industrial zoning near the freight corridors are just limited. It's hard to find them. And also, there is institutional competition at this point, driving up the larger sites, which is making it even more difficult for new entrants to come in profitably into the play. Then you've also got those economic demand pressures. There's particularly, the tenant expectations are getting more sophisticated. So there's some older sites that don't work as well. So you have to cater more to their needs in a more specific manner. So there is a cutting edge effectively in iOS, and that's effectively why we're in the development side of it. And finally, I think we spoke to that already, that the municipal restrictions are pretty tough on iOS. And so it makes it
Yeah.
difficult, even when you have a piece of land that you think is the right fit. good luck getting it permitted and entitled to deliver.
Yeah, and historically, a lot of existing IOI site actually got converted to higher use. They will say, "Oh, you got a 2 to 10 acre. Why don't you convert it to C-store or convert it to multifamily, right? We'll make more money per door basis." So a lot of those sites actually got taken off the market, converted to traditional commercial real estate, different asset class.
Traditional
Um,
industrial warehouses, all of those.
Exactly. Storage, all that. So, we will tell you about, we'll look at the basis of a land base. That's why this number work for our site. I actually have a client. We're looking for steel fabrication. Gee, the transaction didn't really go through.
Hmm.
It's funny reason. The zoning allows it. That clearly say allows it. It's a steel fabrication. They have to lay down those steel, those raw material like in the yard. City Wachihachi just say, no, we won't allow it. You have to apply for special use permit. And my client said, no, I'm not going to buy it. So in the end, he walked away from the deal. That side going to bring your total investment going to be over 150 million. The city would rather don't take the money, say, I will not allow those uses in my city. So it's really, really challenging to get through. So I see we're gonna go straight to the project, but I want to touch base on the local market. Just give you one slide, talk about that, a couple of slides. So iOS actually really it's a good growth in the Austin market. Now, let's people haven't heard about the news. Well, how's the Austin market looking? We always say the market is driven by labor, right? By the employment. The unemployment rate right now it's below state level, and also national. So national is 4.1. So right now we are not too much below. We are about what 2 percent year over year growth, but the unemployment is 4%. If you see this chart on the right, the green line is Austin, so the unemployment rate actually is below where the US and the Texas average is. And secondly, you can tell this, here's the number, right? What sector of job adding to? Healthcare, education, hospitality, and continually a tech sector expansion. But you do hear some layoff for the major firm, but you also, same time, those people who got laid off also transition to the new sectors, right? Anything to do with AI, software development, or other new smart factory or different type of professional services. The third part, and we actually went to a conference today, a specific talk about the corridor, right? The logistic smart manufacturing corridor started from Monterey, cross the border to Laredo, all the way to San Antonio, Austin, cross to Dallas. We actually Austin in the center of the this a position in the center of the logistic manufacturing corridor. So the site we're picking up, right? Even though it's a very regional service, but you got it from a macro perspective, it's definitely is in the growth, passive growth. Okay. So some news I'm going to flash. I'm sure you heard about the data center just recently got announced in Huddle. It's one of the site actually. She is Tucker Rice and the father of Bob Rice's site. Zach worked on that site too.
Hmm.
So it's in the corner of 79 and 130. So it's a big data center announcement. Secondly, you heard right? NVIDIA just they always on the news. They just signed the new lease at domain. And yeah, the biggest news of the year, of course. Today, if I have people on the meeting today, if you're investing in our Bastrop Harvest One project, you got good news. We actually, today is Thursday, 2 days ago, I got a call from Milo. He represents Elon Musk and SpaceX real estate division. He called. He actually submitted an LOI to our inbox. We're responding. I'm surprised. He mentioned billionaire don't pay much for the land, right? But we negotiate. So they
How
actually
they become
submitted.
billionaires? Yeah.
Yeah, the billionaire. That's why the billionaire. So they actually joint venture with Samsung, putting 16.5 billion for their AI chip protection. That's in Taylor. So 130 in the certified corridor, definitely we see a huge amount of growth. People are waiting on the sideline for 2, 3 years now. Finally, gonna come. So okay, GT48. This is what we call Georgetown 48 acre. I'll tell you a little background how we got the site. I remember I on the weekend serving CoStar saw the site pop up. This amazing basis. So we got it right away. We closed on December 31st, 2021. The end of year closing cash close. Oh no, cash with financing. So it's a 48 acre. Great location. Like I said, sandwich between 130 and 35 corridor. In here, this is the 48 map. And you can tell this is surrounded by single family. You can see the map. When you zoom out, will see all the single family mass community. Right below it, right here, this where my cursor is, gonna build 2,000 single family homes. And my homes also Ross Perot's home building company are collectively building a 2,000 home right below this. And Saddle Creek all the community is far to the right side. When we actually got the land, the first thing we do is what's the best use? We talk about and we think about different uses at the time, BTR, industrial uses. Later on, with all the market study we found, this iOS concept, we will actually subdivide it to 16 lots, one of which will be detention pond, and the 15 others, we put a minimum infrastructure. Okay, the roads coming in, grade the site, and putting electrical and water, and we don't even have to public wastewater. We just put a septic. So that's a concept we're coming up with. But here is the idea. He give you some background about the site. Oh, this is a good map to show what the location is. You can tell this is about 1 mile to 130, 30 minutes to downtown and 24 to Samsung. So great location. She mentioned Smile service, distribution. Your plumber can go back to their station, serve all the neighborhood around it, like an electric company, AC company, all the trucking companies. So you can see how critical this corridor really is at this point. Um, Business plan. Chi, you want to go with the business plan?
Sure, sure. So, as I mentioned, there's a lot of value here, but it needs to be unlocked, right? So that's the next phase of GT48 is really how do we unlock the value of the site and turn it into true iOS product that can be, consumed by the market effectively. So the idea is over the next, call it after we close over the first 9 months or so, really the goal is to do all of the horizontal work that's needed to the site itself. We've started turning some dirt, but that's very early stage work. There's a lot more to be done, and it's going to employ a lot more dollars to actually get the work done. Then the idea from there is, as Lynn mentioned, there's effectively 15 economic lots. So the plan here is to maximize our speed to revenue by selling 14 of the 15 lots as land sites to potential users, developers, or investors as intermediaries who wish to go on and develop the product. Then the plan is also to develop one vertical, which would also be our showcase, test case to demonstrate to the market what the product will look like, so that it increases the speed of the sale of the property and also just kind of delivers on the product itself. So that's that.
Yep. And the reason we built one spec, because the broker also mentioned to us, typical iOS user are ready to go. If you build one spec, they see it. Typically, we can be able to lease that or sell it. Yeah.
Yep. So I think Lynn's done a great job just covering all the major items here about the strategic location, the connectivity, and effectively the interesting component here is a lot of iOS sites are just one-off 2 acre sites somewhere around Austin. Obviously near a good corridor would be very helpful. But to have something like this where it's fully zoned and entitled for up to 180,000 square feet as a park is absolutely interesting because this makes it a potential institutional play too on the back end. And as Lynn mentioned, we've already received some interest to, hey, once you finish this out, we'd like to even just buy the whole thing. Uh,
Yeah,
so
yeah.
it's very interesting. Yeah.
I do get a call from the other broker I mentioned to you. I had a call with him earlier this week. He said, I might have a user, just institutional users just buy the whole thing. So yeah. So this is a visual of showing where the, oops, this 15 lot is. So you can see this is a four tucked in the back. You can actually standing on the side, you can see the 130 traffic coming through. Really good visibility. And every single one of them, we can design them differently depending on the tenant need or use. And this is give you visual to seeing how the sites typical layout. Typically, we will have front putting all the driveway, like a parking. And this is building typically is 10,000 square foot, and the laydown yard will be around it. Yeah, that's a very. Sometimes we'll build two buildings depending on the needs. And this gave you a rendering. And to be surprised, one of the reasons I always so profitable, it doesn't cost much to build something like this. Yeah, you can see. Here's another rendering to show what the park gonna look like. And she mentioned with Austin, we know maybe there are only one there's only one we know of. It's in Taylor and fully leased and sold. We actually we hired that broker who represent the site represent us. There's not many sites available in this region. Yeah. Well, this is the construction site. Because this is a part of our orchard project, we actually didn't really waste time. As soon as a construction loan approved, the second day we mobilized the team, they already start construction. When she mentioned the first phase, you guys who invest in the project gonna get really lucky. We already started construction. We have not really formally taken anyone's money, but today, well, will be the day we explain to you the folks what the iOS is. We're gonna open up, and typically when we opened up, we got commitment coming really fast. So you can see the sites, they can start, paving the road, do the grading. So the plan is to have the horizontal construction completed in February. And we start vertical construction. We are getting a really good bid for design build for the spec home. Hopefully in the next 2 weeks, we will get the contract signed. So, Chief, go with the
Great.
number.
Yeah, so
Yeah.
just real quick on the numbers. So this is about at the current business plan, which is actually quite conservative because we haven't even taken on a loan for the vertical. We're just assuming all equity. So it's a very low
Yeah.
leverage deal. So at this point, the total capitalization of the deal is about 16 million, with about 6 million of senior loan, which is already committed and available. And total equity of about 10 million really to fund the difference. But we may, if you can just see that little chart stack over there, we may the bank has been very interested in the project and told us, look, come back to us for a loan as soon as you start your vertical, or you're ready to start your vertical. So we may increase the debt proceeds. Right now, we're looking to close this quarter and complete construction by the end of 2027. So effectively, it's really just a 2-year hold period. The business plan, again, as we mentioned, is to sell 14 lots, go vertical on one, and sell that. But we are very adaptive to market changes. Lynn hadn't mentioned, but there was actually another potential user that wanted, a lot more space, right, in one of their yards, and so that would have given us also pretty good upside and other opportunities. So as we kind of continue to move forward with the development, we keep finding new opportunities to create value with the site, just given the demand. The target projected multiple, given how short the period is about 1.32, but it is a strong, project levered IRR even with the low debt. The minimum investment here would be 200,000 per investment per unit. We have two options for investing in the project. It's first is a 15% fixed annual accrued return, and the second would be a 10 pref with a 50-50 split, more of the traditional common equity if you're looking for upside. And option A would be more of the fixed.
Yeah, we have actually worked through the performer, the rent base we use, we will explain later. We really conservative. The broker told us the number of 30,000 per month rent. We actually took it, the equivalent to $36 base rent. We actually underwrite it, what, 27?
We did. So
Really,
that was our low case. In fact, the broker was telling us somewhere between 30 to 36 was the rent. Plus, then you've got the triple net component, right? So we started at 30 and even ran it at 27. We have those scenarios available.
yeah.
Yeah.
So it's funny when we first put together the performer, we start toning down the number, be really conservative. Million mentioned, we haven't seen such a good number for so long.
It's been hard in this market, right? It's
Yes,
this
really.
is a very unique
Yeah,
asset class and a very
yeah.
unique play. So
Uh,
just, yeah, do you
yeah.
want to go over?
Well, I was gonna. Oh, okay, you did mention the minimum investment. We do want to mention if for folks who invest in 500 or million, we will have a more favorable split, profit split.
Absolutely, absolutely. Yeah. So the larger investments obviously get the benefit of a better equity split. Just overall, again, and we mentioned it's about a $16 million project. Right now, we're looking at the land acquisition of about 325 a foot, which is about market given the unimproved status of the land. And then moving forward with horizontal lot development and then a vertical component as well, which would basically is about $7 million of total construction costs. There are other costs as well, frictional costs and things of that nature, plus interest reserves, et cetera, that we have to factor in, which is what puts us at about 16 million. Then from a revenue and operation standpoint, as we mentioned, just a little bit more detail, we're looking at selling those, there's 15 lots effectively. We're looking at selling 14 of them at the $12 a foot and then selling one vertical, leasing it up. We've assumed 28, which is a fairly what we believe to be a fairly conservative number here. A foot, which is $280,000 in total rent, at an exit cap rate of 7, when the market is actually trading between 6 and 7, depending on credit quality. So we've just gone ahead and just been a little bit more conservative on the credit quality. So looking at about 21 million in total proceeds. So that's effectively where you can see the gross profitability of the project. 16 million cost, about 21 million in total revenue in the door. As Lynn mentioned, 200K is the minimum, but we have 500K $1 million options, different splits. Everybody starts with a 10 pref, and then the splits above that change depending on capital invested. Targeting an LP IRR of about 20 to 24%, depending on the investment level and the split level, and multiple of about 1.3 to 1.4. We have sponsor fees, obviously, for running the deal in sweat equity and all these other things. That includes an acquisition fee of 2%, an asset management fee on equity of 2% per year, a loan guarantee fee for the guarantor on the full recourse loan of 2%, and a development fee on the construction of 5%.
Any question, just type in. We are about to finish. We will answer your questions. So let's talk about the risk mitigation. Like I mentioned, construction already started, construction loan approved. I personally guarantee those loans. So it's really no guessing work right now as the project moving forward. Uh, the loss sale, the phase loss sale will actually be able to generate the cash flow, right? Will pay down the debt. People actually ask me, why don't you just build all that? Why you sell the land? Because we do believe this actually gives an investor opportunity, also get an early exit, also investing the. I'm going to mention with a very good possibility we will buy some of the lot, do the build because the number actually we're going to show you the number actually looks really good for people who buy the land to build it. We want those the next buyer to make the profit. And always say leave the meat on the bone for next buyer, so it'll be attractive. Yeah.
Wonderful. Yeah, so you mentioned, right,
Yeah.
risk
Go ahead.
mitigation. Construction's already going. We're planning for early revenue generation from the sales of the lots. Obviously, our investors who wish to do invest to own, you'll see once you see the profit margin later, you might actually want to just buy it and let us build it and take ownership of a fully uh, developed asset just for the benefits. We are proceeding with like the premium vertical iOS, which will really cater to all of the major needs of not only, the local mom and pop, or regional operators or owner users, but also institutional qualities like the United Rentals, et cetera. They have a certain quality level that they need. We're definitely our goal is to deliver on that quality. And then, as we mentioned, there's flexible exit pathways. There's just every time we talk to people about this deal, including brokers, lenders, there's always new paths that keep coming up because of how much demand there is for this product type. And finally, the market fundamentals are rock solid, right? The rents are going up, right? Rents are very strong, and the vacancy rate is very tight, particularly in our area. So these are the risk mitigants really for this product type.
So the timeline, like I mentioned, we are going to open up a registration subscription. We like to get the funds, the first phase closed by end of the month. Construction are on the way, all that. So that is our timeline. Maybe we should start taking questions or yeah. Okay. Yeah, I see one question got typed, and if anyone has any question, feel free to type in here. Oh, here's a question. What sort of demands do tenants have? Mm, demand meaning type of tenants or demand? Oh, what would they like to see?
Yeah, sorry, can you clarify the question? Is it what type of demands do tenants have being the users or whoever asked the question, if you don't mind just
Yeah, if you don't mind, specify that question. I would say if you ask what type of tenant we mentioned, tenant, anyone who does the services, they will need outside storage. They cannot store inside. Could be construction material, equipment, logistic, transportations, end user. Oh, yeah, got it. Yeah. So yeah, that's correct. So yeah, those type of tenants, when we show you, give you back, let me go back to the slides. Oh, you all know how to contact that. I forgot to put any barcodes, anything, and you should know how to contact us. Oh, did I missed it?
I think it was earlier up. Yeah, I think we're looking for the industry users.
Okay, there we go.
Yep.
So you can see the user here, like I say, United Rentals for equipment, right? And the fleet service, trucking, logistic like FedEx, freight, and they didn't put in any services. I know a local services, trade, construction, uh, plumbing, electrician, yeah, any of those. Okay. Can you please explain the end user profit? Okay, well, actually, I have a backup slide for that. Who's
If
going to
you do
buy
have
the
that,
site?
let's sure.
We actually, the next phase after this, we are seriously thinking. Actually, our team member who work in the office go, "Hey, are you investing? Are you investing? We want to put the money in here."
And you fill the
So
pool.
lots of meat on the bone here. Typically, that's a test, right? Every time when we finish underwriting, we're like, we'll walk around the room, and go, "Hey, everybody, are we ready to invest in this one?" You ever said, "Yeah, we
Other
are."
people have a football pool. We have a GT48 pool.
We do. Our company do have a GT48 pool.
All
Okay,
right. So
let's
so here's
explain.
the example of the profitability uh, embedded in these kinds of deals, right? And so you'll understand how this industry is working right now. So if you just look on the right-hand side, start at the bottom where we have land, then we'll have construction, and there's a middle bar saying total all-in basis. That's our all-in cost per lot. Then we've got effectively the developer profit or user equity, and then we've got the sales price. So if you look at just the numbers in the center, just real quick, effectively what we're saying is the land will be contributed to construction at $12 a foot. Let's just say that's the justification for why land might be worth 12 or more. Then you've got, let's just say, approximately $250 per foot of construction cost. That's hard, soft, financing, everything on a 10,000 square foot warehouse. These are backed by pretty good numbers that we've gotten already from a actual construction company, and then we've financially modeled them to figure out 250 a foot is a pretty rich number. In this case, 256 a foot. So that gets you to an all-in basis of, let's say, about 3.87 million, right? 387 a foot on the structure. But don't forget the 2.5 acres of land is driving a lot of this value. The rental is the values in the land. The building just is one component of this. So from a construction cost standpoint, we're looking at effectively, let's just say 3.87 million. Now, when you go out to the market, brokers are for new clean quality product, brokers are going as high as effectively 36,000 a month, 36,000 a month in rent. And on the lower end for new product, it's about 27 to 30. So here's just a base case at 30, delivering new high quality product, which could, in our mind, theoretically be 35,000 a foot, $35,000 a month in rent. They think of it not so much per foot on the building because you're really renting the land, right? The building is just a necessity. So the user is willing to pay so much per month for your site, which is, in this case. So let's just take 30,000 a month. That's about 360,000 a year, and it's a triple net deal with the landlord, like an investor or us as a landlord, at a 6.5 cap, which is the midpoint between sort of where Austin is trading at for institutional versus sort of very local users or owners. You're getting to somewhere in the, call it, $5.5 million range of value created. So if you're a user or somebody looking to buy an iOS site, the question for you is very simple. Should I build it or should I buy it? And the math is very clear right now. I should build it. And the reason is it's very hard to find sites and build sites right now. So there's that distinct spread over there. So over here, you can see that for a developer, who was to buy in at our all-in basis on construction and buy it at full market value, there'd be about a 1.4x multiple, or call it almost 40% profit margin in the deal. So that's kind of how it looks.
So in our GT48 today, investing in that project, we're selling 14 lots, one of which already sold. You know who that sold to? The broker who worked with us on this deal. He said, I will buy the lot next to the detention ponds. We can imagine we are planning to sell all this in 2 years. Okay. I got a really good question from the investor. What if we don't sell them? With this much meat on the bone, we actually thinking putting together a second group of people, just buy this and build this. Really depends, but we want to focus on getting this project delivered first, instead of just making money. But think about this, right? We actually might be home buyers for this site. And this is a really, like I said, when we run through the numbers, start making a lot more sense. But thank you for asking the question. We do want to do, you're thinking the right way. All right, so let's look at the questions. United Rental, our example. Yeah, oh, okay, got it. What sort of demand do tenants have? United Rental, okay, got it. Very good question. So United Rental, they rent equipment, right? All type of construction equipment, any type of heavy use equipment. And typically it run by day, by weeks. They're not gonna get, unless this is very unique, they're not gonna drive from San Antonio into to Georgetown. So they wanted to have the last, that's why you see all kind of United Rental on 35 within 10-mile, 5-mile radius, right? When someone called the AC company or plumbing company, they have to fix the pipe, or someone need the steel to do their construction, they're not going to drag that steel out of Kyle or Salado or anywhere. They want to be nearby. That's why you see the demand. Actually, it's interesting. It's the same set of tenants. They actually have multiple locations. when you have location like Georgetown, Taylor, Huddle, it's a newly developed on the path of growth. You will need all those trades are gonna look for the sites nearby. So that's kind of thing with the demand we've been seeing. That the demand had replicated from location to location. Yeah, and multiple location needs for multiple locations. So that makes sense. Yeah. Um, oh yeah, this person asked, are there any potential clients? Yes, we are. We actually got, like I said, one of the broker that decide to, buy one of the lots. We are potential clients. Also, I've been hearing from multiple sources. They will once we get through all this first phase, people are thinking, calculating what they can do, how many lots they will purchase. And if some of you, as an audience investor, you wanted to build your own, and I actually hired Arco Murray, who is one of the top design build company. The reason we actually, when she mentioned a $210 a foot, we really get the number of quotes from them. If once we build the first one, the subsequent one can be really cost effective. If you want to take down one lot, you're welcome to talk to us.
And sorry, just to clarify, the 210 a foot was the hard cost. All in cost was the
Yeah,
250 a
hard
foot. Yeah.
costs. Yeah, yeah. Any fee GP will charge when 14 lots are sold. And how I mentioned that 14 also, no, we actually, there's a broker transaction fee for the 14 lots. Yeah, when all 14 lots sold, the project exit, yeah, there will be what is our GP split? 20%, 50% per, if you invest
Above the
in two.
prep. Yeah, above the 10
Right.
prep.
Yeah. Yeah.
Yeah.
But if you're investing 500 or more, it would be 80, 20, a
60,
million,
sorry, 60, 40, and then
60,
70, 30. Yeah.
70, 30. Yeah. Yeah. That's a good one. What's the risk or worst case scenario?
Uh, Worst case scenario is that all building stops in Austin, or much of the building really slows down in Austin, right? I mean, we're this much of this demand is driven by the boom in, all data center construction is just one aspect of it, but there's just so many billions of dollars of construction going on the east side of Austin, all the way north, all the way south. That's fueling a lot of this. There's still a lot of actual commercial construction and projects in the ground. And then there's hopefully planned multifamily coming in. So that's where some of the demand drivers that already exist, we hope will sustain and continue to grow. As Lynn mentioned, there's job growth, right? In addition to obviously wage growth, but there is actual true net job growth. And as long as there's job growth, and the cities keep growing, that's really the one key driver. Then you've got that logistics corridor, as long as there's a lot of logistics along I-35, you've got that. So if that slows down substantially, yes, that could be absolutely an Achilles heel, right? Like if we go into a massive recession next year and it really does slow down GDP by a couple points, sure, yeah, this could suffer for a couple years.
Yeah. So we actually did the math. I think we had random did the math. The risk is a time, right? We know the demand's there. So the risk is, hey, we don't sell 2 years, we might sell you 3 years. I think it did IRR on that. We're still looking at the high teens number.
Mhm.
We also, if we sold with six or so, we'll get all the loan paid off or something. Yeah.
Approximately, right? Because we're selling for 1.3 on the land.
Yeah.
Yeah.
Yeah, exactly. So because our leverage is really, really low, and we feel pretty good about if when the worst things come, the time dragging the construction, the sales really slow instead of 2 years, we'll go into 3 years, or it's really. But our base is very, leverage is very low. Yeah,
That's a great question. There's always risk with any investment.
yeah, that's true. Can you explain how the total fee shown after the rate of return, for example, 15% case? Can you
That's a
explain how?
yes.
Yeah,
That's a fixed return, right? So 15% is fixed, net of any fees. That is the that is the preferred return, right?
Yeah, so you can
Yes.
think about this as no fee for those investor. So 15 is 15. So we don't take a fee until you have the 15%. Or if but basically the you'll probably get the 15%.
Yeah. I
Yeah.
think the way it generally works is obviously we'll take the fees as the deal goes along, but of the net profits of the deal, obviously the Class A gets paid first. That's the point of being a Class A, is that you're giving up your upside, but in exchange for being insulated from the performance of the deal itself, right? If you're not sure. So then you get
Yeah.
paid first, and then Class B gets paid next, but gets to potentially enjoy in a much larger upside um, as that investor.
Yeah. Okay, next question. In iOS growth, a result of centralization of industrial storage, is iOS growth a result of centralization of industrial storage? What is this replacing, and what are our competitor in the Austin area, and where are they in the process? Land, horizontal build, vertical, already up and running? Good question. Yeah. I will say the iOS growth in terms, iOS always have needs, right? Regardless, for longest time, they always need, but they are scattering around the cities. The needs for centralized location is one could be the capital, right? We know when she mentioned institutional capital are looking for many different way to deploy. Office pretty tight right now. That's why they all went to build to rent, and multifamily got really tight. But everybody know the math, right? They can calculate the numbers that, oh wow, we build something like this, we can get really high yield. And our gee, what is a year on cost here with all that? It is close to 8 or 9.
Yeah, it was north of an 8. I think it was a 9, but
Yeah,
we
it's a
can
nine
obviously circle
percent.
back with the actual,
Okay, so folks who understand multifamily, you go find a multifamily site, okay, your own cost will get to 9. It's really, really hard to do in today's market. So that's why the more institutionalized industrial and LOS sites start coming. What are the competitors? As far as I know, we haven't really seen that very popular in Austin. In Taylor, there's one called Banani, right? The site.
Mhm.
We've seen one proposal, someone proposed in Kyle. I really haven't seen many coming online. I mean, nearby, I haven't seen any close to this submarket.
Yeah, there aren't
Um,
too many organized players, I think is what, yeah,
no,
institutional, heavily backed capital. It's growing. It's definitely growing. If you look at, just search for iOS largest players, you'll see, but they're still small. They're in the billion-dollar range, not, there are real estate companies that are in the many, many billions of dollars ranges,
yeah,
private equity firms that are, much larger than that. They're small. One of the just anecdotes is looking at like mobile home parks and RV parks 10 to 15 years ago were very mom and pop. And then the industry came in and institutionalized it in a big way,
yeah,
right? Particularly, I mean, the guy, equity residential's guy, I can't remember, recall his name. But that's how they came in and started slowly amassing and accumulating. And then once they had a good corpus of assets, then they started running them very, very well and very institutionally. And that created liquidity in the market for this asset class. I think we're seeing that happen right now, but we're still in the process of seeing it. So it's very interesting to watch this transition and be a part of it from a developer standpoint.
yeah. I'll give you, I went to Houston over the weekend. Houston, mm, no surprise, right? iOS is not that popular. Why? Because Houston has no zoning. It's so easy to get an iOS site historically. So really the rent over there is low. But Austin, try to build any city zoning limit. No, it won't get it done. I forgot to mention one aspect. Um, we actually closed the land end of 2021, 2022 when we actually do the development. The new legislature passed in 23, which allow any site in ETJ to decide to get a deneg out of the ETJ to go to county. That's what we did. If we stay in Georgetown city limit, we were not able to get the zoning. So we made a decision, got de-annexed. So that's one of the reasons too. Yeah. Okay. What are the LP return under base case?
Yeah, I think we have it in there. The base case returns are somewhere expected to be somewhere between a 1.3 to 1.4x multiple on the investment, or somewhere between a 20 to 24% IRR is kind of the way we're
Yeah.
looking at it.
Yeah. Yeah. I think so. Yeah, it's right here. Yeah, you can see the LPIR is about 20 to 24. Yeah.
So that's our target projection.
Mhm. What if in a few years rent drop a little like multifamily in Austin now? What would be developer return when they buy the land to develop? Um,
We
yeah,
can
we
use
do
the
see.
math to do that.
Yeah,
If we
yeah.
go back to the just the developer chart or
Okay.
the backup slide, it's
Yeah.
pretty easy to see. Then the question becomes, let's just do some simple math, right? The question
I
becomes,
think
what
there's
does
a
it,
worst case. There's a
how
worst
low do
case.
rents have to? Well, that's even worst case is still a 1.3x multiple. I think the
Okay.
investor question, if you're trying to downside risk, is at what point, if it costs you 3.87 to build, right? What rent do you need to survive, right? So
Mhm.
effectively, you're going to need, if you have 3.868 into 0.065, you effectively need to make a minimum of $250,000 a year divided by 12. So your rent needs to be about $21,000 a month. So in a
Oh,
market that's trading at 30
21,000.
to 36 for a new product, you'd need
Okay.
21,000 to break even, right? On your
1,000
at
times
a six and a
12
half cap,
divided
right? So
by,
we sold. Mhm.
yeah. Okay.
And obviously that doesn't include sales costs or anything like that. So maybe say
Right.
22,000 in rent, 22.5 maybe.
Okay. Right. Okay. Um, vertical versus horizontal, which one's more profitable? Interesting. I would say what we do at this point, horizontal is the pure profit wise a lot smaller. I would say not a lot smaller, but the risk is a lot lower. Vertical, it's returned bigger, you can tell, right? But taking more risk, right? You actually pick up the hammer, you have to build it if the leases. So I would say, yeah, horizontal for me, that's why we like to just sell the lot. I'd rather sell the lot to the builder. Like we more like think of single family. Think about single family. When more of I have a Leander, I have a 20 acre. I'm selling 78 lots to DR Horton. I'm writing PSA right now. Why don't I build it? Because DR Horton will build it a lot better, faster, or cheaper than me. So I sell to them. They make more money. But for me, but so I would say, yeah, that it's a risk and a return balance. Okay, I think we gone through all the questions. It's good. We got really good questions, and we're actually filling in the whole hours here. I thought it would be a lot shorter, but we end up to go a lot deeper, wider in terms of topics. Well, thank you, everybody. I actually surprised everybody stay. There's one person job, but thank you. Feel free to contact us with any questions. Like I said, we will open the investment portal to everybody and to sign up. If I have any question, come on, talk to us. Okay. Oh, there's a couple more. Sorry. Huh. Okay. Sorry. There are two more. Um, Industrial open storage is not as sophisticated as office building nor residential building. Why so expensive? Hmm, expensive?
In terms of why, yeah, why is it trading so high? It's again, it's scarcity of supply.
Oh, Yeah,
Scarcity
yeah,
of supply is driving up the rents, and it's making it difficult.
right.
Right?
For construction wise, not that expensive, right? Because the land actually is relatively inexpensive. Well, land is more, 1.3 million for per lot because you're actually getting 5 acre. Yeah, actually, construction wise, the base construction cost vertical is only quoted at $85 foot. It's very low. Okay, thank you. Let's see if oh, expensive to build. Oh, um, 265, that's really not the pure construction cost. It is overall, because engineering, contingency, um, and also including the site work. So when we do the spec home, 210, including all the site work, engineering, civil, architect, fee for the city, everything included it. Okay, so the pure vertical construction cost, like I said, it's only 85 for the shell, then adding all the interior finish and the
Yeah,
office.
this again, this is specialized product, right?
Yeah,
If we're targeting, $20,000 a month in rent, $25,000 a month, there's a lot of Class C old warehouses that look like old steel bare warehouses that are renting for that. This is going to be a much higher quality product.
yeah. Okay. Oh, wow. I like that. Question keep on coming in. Worst thing. So, yeah, for the ones that everything's recorded it and we will send that to you. And so you can see that, or some of your friends and people couldn't join in. I'm sure we make sure they watched it. Like I said, we wanted to make this evening special for you. I know Thursday night you could spend some time, do nothing, watch TV or read books or enjoy your life. But I really appreciate you take time to learn about this project, this product, and I think it's good. You got the opportunity to hear this. Oh, thank you. Thank you all for your support and trust. Okay.
Thank you.
Bye bye. Have a good night.